I don't see anybody typing anything in chat, so I'm assuming you're still taking the quiz, but you can take it now or later. All right, and I want to say hi also, just a shout out to our YouTube participants. So if you're on YouTube and you're joining us, again, welcome. Thank you for joining us. Thank you for being a part of this. If you're listening to this later also, thank you for stopping by, and I hope you do get something. In fact, I know you'll get a lot of insights from this. All right, so let's keep going. So I am gonna go ahead and introduce our panelists. Tomi, Charlene, thank you so much for joining us today. I appreciate your time. I know you're busy women, doing amazing things out there, but just kind of taking an hour, and a half or so just with us is very gracious of you, and thank you. Tomi is the director of collateral trading and optimization in Tomi, okay, help me out here.
Scotiabank.
Scotiabank, thank you.
We have had a thing.
I was calling it something totally different earlier. Thank you. That's Europe's global capital markets business, and she's responsible for executing a multi-strategy financing trades, to manage the bank's asset and liability bank. She has over 15 years of experience in general, and she previously worked actually at UBS Investment Bank for 11 years. Lots of experience under her belt. She also has a lot of passion around representation, bringing that unique business perspective to the lens of diversity and inclusion. And as we all know, this is a huge topic that has been, just out there lately, and very important, especially for, us, not only as women, but also a lot of us who are quote unquote, maybe underrepresented or, called a minority group, so to say. So again, welcome Tomi. Tomi is also a wife and a mother of an amazing 10-year-old that's probably keeping her on her toes, on a daily basis. So thank you so much for joining us. And then Charlene, who Fadi Rapport, she is the founder and CEO of Guidify, right?
Yes, right.
Platform that connects women of color with financial advisors and experts, and as well as wealth education. Great experience. She started her company, based on, just her experience, just not finding the right person to be her financial advisor. So hopefully she gives us some insight into her advisor, angel investor, former regulator who has spent about 20 years of her career in financial services. As you can see, she brings a wealth of education. She is also an author of 2 children's books, and so about money. And so again, she'll have a lot to share with us from that perspective. As a property, have any questions, lives in Washington, DC, in the US with her husband and 2 amazing children, Falashade and Ayodele. So join me, ladies, in welcoming Tomi and Charlene. We do have a lot of questions for you today, so thank you. And thank you for helping me out with my the right pronunciations earlier. All right, so we're gonna go quickly. I'm gonna unshare right now. I'm gonna go, let me see. Bear with me. So I'm gonna go quickly. We're gonna go quickly into the questions and answers at this point. Again, as a reminder, as we navigate through the conversation today, please, if you have any questions, put it in chat, take notes, be open. This is an opportunity for us to learn, grow, and shift our mindset. So I'm going to start off with Tomi. I have a very generic question for you, and I'm going to ask you the same question, Charlene, today. So let me see. I see it as something that I feel like we've not done justice, especially with our, when we grew up in our schools. We don't really spend a lot of time getting educated. It's not necessarily, I can't remember being educated on it, when I was in high school or whatever. Maybe I was just not paying attention, but a lot of us probably feel the same way. So let's talk about that. Why is financial literacy important? What should an average person know about money and finance?
Yeah. Hi, everyone, and thank you. Thanks, Kemi, for inviting me. I'm really excited to sort of share ideas and hear from everyone as well. This is such a good question, and obviously the quiz. I've started to see people kind of chatting in their money personalities. In general, I find that people tend to be sort of anxious about money, and it's really important to grasp the concept that money is a tool. Money helps us to reach our goals, helps us to reach our dreams, helps us to create the life that we, day to day. I think our parents, they did their best, but a lot of them obviously worked really hard to get us to where we are. Like, they made sacrifices. They did not have that disposable income to just really build and create wealth. So they would taught us up to the point of saving. So a lot of us are actually very good savers, but savers doesn't really make you wealthy. Saving doesn't make you wealthy. Investing makes you wealthy. And that's what we're going to sort of talk about. And when you say, what should the average person know? I think one key thing that I've had to learn, and, as an average person myself, is the concept of net worth. So net worth is just a simple calculation. What's your assets less your liabilities, or less your debt? So when you think about your assets, you're thinking, what's the property you have? What stocks do you have? What's your retirement pot like? Less, then take away your credit card, your mortgages, all that stuff. What's the net number that you get? And I saw an article saying Black people have like net worth on average. I think it's in one of these UK data surveys. Well, like 0 to negative or something. And then, there's thousands in terms of the net number for white families and Indian families as well. So why do we have stuff, on there? So yeah, there's a lot of stuff to sort of talk about. But I think that changing that mindset to really think about wealth creation and owning assets, as opposed to just being rich, which is just, the power to buy things, your purchasing power. There's a quote that I always say, which is, I saw it somewhere, is wealth is quiet, rich is loud, and poor is flashy. So it's very important.
Can you say that again, please?
Wealth is quiet,
mm-hmm.
Rich is loud,
mm-hmm.
and poor is flashy.
Wow. Okay.
So most of the time, the difference between being rich and being wealthy is a very, very key thing to understand. And being wealthy is about owning assets. It's about owning things that increase in value. It's not on spending your money on things that are just going to depreciate and deteriorate. So so I hope we're going to touch on a lot more of this stuff throughout, but that would be my initial thoughts on what we should be thinking of. We should not be shy about talking about money.
Wow. Okay. All right. I am getting excited. So ladies, if you're on here and you're on YouTube, please just share this on your social media or whatever your platform so that people can come and listen to what we're talking about here, because we're talking about very insightful stuff. Savings will not make you wealthy. Interesting. Investment will be important. And can you imagine how much we don't know about investing? And we shy away from it. I also picked up, and of course, the wealth is quiet, rich is loud, poor is flashing. That's intense. And just those insights around just that gap, that education, understanding gap, and just comfort level with what we really should know to get us into that place of wealth is very critical. Thank you. All right, Charlene, please.
Yes.
I can't wait. This is hot. Please, people share.
This conversation is precisely why I started my company, Guidify. So, you asked about money. Like, money is freedom, money is power, money is access. That's it. That's why you need to amass wealth. I think particularly when it comes to women, sometimes we can be socialized to place that on our husbands, to place that crown on our boyfriends. But no. Every woman should strive to be financially independent. You can still be married. I'm very married. But financial independence is so key. And if you're 21 or 50, financial independence is the goal. What does that mean? That means the independence and freedom over your time, talents, and treasures, right? That means you can spend all of your resources on the things that you care about. How do you do that? to Tomi's point about net worth, you manage your debt. Most people struggle with debt. I know we're going to talk about this, but debt is the problem that drags us back. How else do you do that? You increase your income. You make sure you're increasing your income by any means necessary, and you effectively plan, right? If you fail to plan, you plan to fail. You need to have a plan for your money at every age. And if you're not planning for it, it will do... If you don't plan for your money to do something, someone else will decide what to do with your money. I just think that, these conversations, this idea of financial literacy, I think it should be wealth literacy, because I can talk to you about credit, but I want to tell you about credit in relation to your building your wealth. I want to talk to you about investing in relation to that bigger picture. I want to talk to you about budgeting. Budgeting is important, and it's very much connected to your plan to build your wealth. And so, one of the things that I do is I teach those classes so that folks can have that mindset. It's not enough to know about your credit report. You got to know that if you have bad credit, you pay more for things, right? Bad credit is the price that you pay for financial products. Your interest rate is the price. So if you have bad credit, that means you're going to pay more. And so once you understand that, you realize this is taking money out of pocket, so I need to check my credit. And so I think that as a frame, women need to own their financial lives, have that agency, and start from the beginning. And I think that we need to plan. You need to plan to be a lifelong learner of money, period. It's complex. You're not going to know everything. So align yourself with people that know, and decide that this is important. Money is the only topic that you need to know about, regardless of what you study, regardless of your job, regardless of your station in life. It's the one thing you've got to get right. And if you get it wrong, it's expensive for you and the generations. I think money, lastly, I'll just close. Money is about legacy. It's about being able to leave and build that generational wealth. I have a good friend of mine named Jakumi Randolph. He's a trader. He always said, your ceiling to be your kid's floor. So imagine that. As high as you go, that needs to be the starting point for your kids. And you only do that if you have a generational wealth building mindset that starts when you're 20. You can do it in your 50s, but it's a lot less costly when you start when you're 20. And don't think you need a lot of money, because if you're young, you have time. And that's even more valuable than money. If you have time to put money away, you can actually do extremely well as compared to someone who starts when they're 55. So I'll leave it at that.
Wow. We are in for a mindset shift. So what stood out to me most, Charlene, you're like, Hemi, our conversation should be about wealth literacy. It's not just about financial literacy, the basics, but we need to take it to the next level. I'm not going to muddy the waters. I'm sure everybody's marinating in, what you just shared. Thank you. We're going to move very quickly to the next question, just in the interest of time, and start digging a little bit deeper into some of the insights that are being shared today. So, next question, Tomi. When you think about financial health, and throwing wealth, since we know now it's important, when we think about the key areas, let's simplify this, right? Are there, what are those key areas that we need to focus on to build that foundation? Because even as to your point, yes, we can talk about wealth and everything, but there's some foundational things that we need to take care of. So what are those pillars? What are those key areas? And how can we navigate through it on our journey to building wealth?
Yeah, that's a really good question. I mean, and there are key pillars, the pillars that I use myself. And one thing I'm going to say here now is everything that I share is just my personal opinion. I will not be giving any investment advice. I am not here acting in any capacity on behalf of my company, but I'm just basing on my own personal opinion on things and hoping that things will, the internet is there for everything to find out stuff. But when I think about sort of money and and income, there's different types of income. First of all, there's active income and there's passive income. Most of us fall into the active income bucket, which is we're working for our money. It's like that hustle mentality. Either by being employed by someone or running your own business. But we need to be thinking about the second type of income, which is passive income, which is the type of income that you can make when you are sleeping, where the money is working for you when you don't have to work. And that's what we want to be aiming towards. So in terms of sort of financial health, the pillars that I go by, there's 4 things. So it doesn't matter how much I get, and I teach this to my daughter as well. Even if she gets £10, somebody gives her $50 when they leave, when they come. I ask her these 4 things. I start to split into these 4 things, which is spending, saving, investing, and giving. So those are always the 4 things. That's the structure. As in, doesn't matter. It doesn't get more complex than that. Think of your money in terms of those 4 things. And I'll start with with giving here, given the nature of this this webinar, and obviously looking that we're Christian women, and we have an obligation through tithing to give back to the church. And it's a personal choice, but most people have that 10% tithing obligation. That is a personal choice. I also consider giving to charity, giving back to your community, even just helping friends and family. If someone is in a tough spot, don't think of it as this big thing that's going to break the bank. Think of it as something that is, you have an obligation and you put money aside in your giving pillar to do something to help someone. So giving is very, very important, part of a financial health. I think it builds integrity and it just makes you a more empathetic person as well. Then we go to the key one, which is spending. Now, spending always falls into 2 things: wants and needs. Now, needs are going to be your fixed expenses, things that that you cannot do without. So your food, your utilities, your shelter, your transportation, maybe education for your children, that kind of thing will fall into your needs. You then have your wants, which is more discretionary. Going to the gym, buying coffees, all these Netflix subscriptions, all these things as, stuff I feel that is nice to have, but you can dial that up and down through the month, depending on how the rest of those pillars are looking. And then I'll talk later in terms, I'm sure Charlene will talk about budgeting as well, but I want to talk about the pillars first, and then we talk about how much can be allocated to each pillar. Then saving. Saving is really important. It's a fantastic foundational tool to financial health. But saving needs a why. You need to have a reason for saving. So growing up, I just used to know that I had to save something, but I didn't necessarily always have a label for what I was saving for. I would just say, I'm saving, and that was all good. But it's really important that you kind of have, first of all, an emergency fund. It might be something that you've heard about before, but it's really important that you have a buffer. If something goes, if you get any surprises or any shocks, if you lose your job, if something, your car breaks down, if any big expense that's required, it's always very, very, reasonable to have an emergency fund, which is about 3 months worth of your fixed expenses, what I do personally. So I don't say 3 months of your salary. I say, what are your fixed expenses that you cannot do without? If you lost your job today, you need to have enough to cover those fixed expenses so that you can still eat, you can still have somewhere to live for at least 3 months. So it's really important to have the emergency fund. I also have things I call the sinking funds. That's more fun stuff that you might want to save for along the way, like your holiday, or I was saying earlier that I want to have laser eye surgery because I'm tired of wearing glasses and contact lenses. But, it's stuff that, I'm going to do it next year sometime, but I've got a sinking fund ready that I'm putting money towards. And when I have the money that I need, then I will do it. And it doesn't interrupt my investing on my other savings plans. As I said, saving is great, but it's not going to make you rich because interest rates are very low. And there's something called inflation. Inflation just eats away at the value of your money. It just means that you save today, you take the same amount of money out of the bank tomorrow and you can buy less with it. So the only way that you can offset inflation and you make sure your money continues to grow is by investing that money in the stock market or investing that money in an asset. I'll start with an asset. So that's that fourth pillar, which is the investing pillar, which is kind of at the top. Once you've done all the foundational things, you've paid and I haven't mentioned debt because debt is a different beast on its own as well. I'm assuming that debt will come into your needs and wants somewhere there that you have to pay your debt. So you have to manage that very wisely. When it comes to investing, I'll try to keep this quick in the interest of time because it's a beast on its own, talking about investing. But it's, there's basically asset classes that you can invest in, and that is property, stocks or shares, which is buying part of a company or a business, bonds or fixed income, which is lending money to a company or to a government. So the US government, issues treasury bonds or treasury bills, which means you're lending money to the government for a set amount of time. It could be a 2-year bond, a 5-year bond, a 10-year bond. And during the time of that bond, you'll be receiving interest from the government. Just like you pay interest when you borrow money, if the government borrows money from you, they will pay you a coupon every year or every 6 months, depending on what's agreed, and you will receive, that money, throughout the time of the bond. And at the end of the 2 years or 5 years, you get all your money back. So it's a safe way to invest and also get some income from it. But the interest rates, as I said, are very low. So just like savings, bonds and fixed incomes will not necessarily guarantee, higher returns or wealth. You have the stock market, which is equities, buying a company. That is obviously the most popular way that people use to grow wealth. And, you can either invest stock by stock, choosing stocks, very, very, very very high intensity in terms of research, because you have to invest in what you know, really. Don't base your investment on emotions. Or you can do things like, investing in things like an index fund, which I can talk about later as well. But that's just a basket of stocks. So instead of investing in Apple, you can invest in the S&P 500, which is 500 top companies in the US. It just diversifies your investment a little bit. The other asset classes are things like commodities. So like gold, our mothers are very, and our older generations invested in gold quite a lot. Gold is still, quite a solid store of value. And then, you can obviously have cash, another asset class that you have. They're just giving you that liquidity that you have, and savings accounts come under cash as well. And then you have the alternative space, which would be things like hedge funds or things like cryptocurrencies that are very topical at the moment. They tend to maybe be a bit more speculative. You probably would need to do a lot of research. I'm not giving any advice about that. I would say you need to understand your risk tolerance before you go into things like that, and maybe keep the exposure to very small parts of your investing portfolio. So one of the things that makes the stock market in particular beneficial is the kind of returns you get. I think on average 7 to 8% is what you would say is sort of average stock market returns, compared to savings where you're lucky nowadays to get 1% on savings. And this is, the fact that you can invest and you can grow your wealth is driven by a simple thing called compound interest. Compound interest is supposed to be the eighth wonder of the world. They kind of call it the eighth wonder of the world because it's just this sort of amazing thing that happens. And it's just the concept of earning interest on your interest. So you put a small amount of money in, maybe every month. If you can put $10, $20, $100 in every month and just let it grow, they will pay you interest on what you have, and then that gets invested back in, and then the pot continues to grow. Kemi, do you want to share the slide that illustrates that in terms of investing for your children, if that's something that you were thinking about?
Yes, I will. So give me a minute here. I think, there you go. You see it?
Yeah. So just a little quiz here. So if you were thinking about investing for your child, say, and you were going to put aside $20 a week, the stock market has become really easy to access these days. I think you can invest from as little as $1, these days on so many platforms. So if you were going to invest $20 a week and at an average return of about 8%, and you said, when my child is 20, I'm going to hand them over a lump sum, how much do you think you would be giving to your child based on those numbers? If you want to put that in the chat.
You can use your calculators too.
Oh yeah.
Or just guess.
Yeah, I think
we have
just
C.
Seconds to guess.
We have C from T-O. There's C, there's B. Okay, T was guessing. Dollar says C. Any other guesses?
It will be more than what's there.
Oluchi. All right, do you want me to show the answer, the winning?
Exactly.
All right, let's do it. All right.
So your child would have about just over $50,000 handed to them, and $20 is something that we probably spend on coffees in a week. You probably spend it without really thinking about it. And this particular investment was a passive investment structure where they literally just had an automated direct debit, is what we call it in the UK, going out of their accounts into something called an index fund, which is literally just a passive way of replicating the market. You don't actually have to make any decisions. You just decide, do I want to invest in America, or do I want to invest in the UK, or do I just want to invest in something that picks global stocks? And you just leave the money and let it do its thing. Any dividends that you get through the time will be put back in and invested. And it's a really good, powerful tool to build wealth. Do I want to stop this if anyone has any questions before I sort of carry on very quickly?
Yeah, we can, I don't think there's any question in chat right now.
Okay.
I mean, we'll have an opportunity for questions later.
Right, okay.
Right.
The other thing I just wanted to kind of talk about, because of the age group here still being relatively young, is the concept of retirement and retirement planning. And Charlene obviously touched on that as, one of the key things that she's sort of driven by doing for women, is to make sure that you can look ahead and, have a good quality of life, after you stop working. And you can only do that by having a solid retirement plan. So if your workplace, if you're 20 years old, 21 years old, 22 years old, and your workplace offers any form of pension contributions or pension matching, in the UK, it's a very common thing. It's mandatory that employers provide pension matches. And I think in the US, I don't know so much about the US market, but I know there's like a Roth IRA system.
401k.
Yeah, 401k, tax-free pension contributions. Please use those tools, because it literally is free money. And you have the benefit of time for compound interest to do its thing. And, just ask questions, like, if you're not sure about it, or it seems confusing. So many more of us know about this stuff now than you. Don't need some old fuddy-duddy old man in a gray suit to explain stuff to you. Like, we could, really, there's a lot of information out there. One thing I would say, though, is when you start to look at ways to invest or platforms to use, and there's a lot of things free, like Robinhood, all these things that do things for free, and you invest in index funds or ETFs and that kind of thing. Be very aware of fees. Fees are one of those things that people don't necessarily think about, but they eat into your capital growth very significantly. Also, try to do it in a tax-free way if you can, because taxes and fees are one of the biggest things that sort of unnecessarily eat into your capital growth. So I think in the UK we have something called the Stocks and Shares ISA. So please, use all that stuff and reach out and ask questions if it can help you in any way.
Wow! We just got a tutorial on, and I see the questions are coming in, so we'll try to capture some of them as we go along. Thank you, Tomi. In the interest of time, I'm gonna piggyback on a question that came up here, and I think you touched on a couple of questions on recommendations for investment and all that, but I'm gonna go over to Charlene very quickly, and I think somebody had a peek into my next question around financial investors, investment and financial planning. So in the midst of all of this, Tomi has done an amazing job kind of talking about the pillars and, wealth, opportunities for investment or ideas for how to invest. With all of that, you need a plan, you need a strategy, right? So you can have information and all that, but at the same time, you now have to be intentional to say, okay, how do I sequence things? What do I do next and everything? So tell us a little bit about, what is a financial plan? You mentioned it earlier. How does it fit into this wealth building, strategy or journey, if you will?
Yep. Yeah. Thank you. So I'm just enjoying the conversation. So a financial plan is a document that gives you a holistic view of your finances. So Tomi talked about a frame that you can use for your money. I'm going to offer another frame that also might be helpful. And this is the frame that typically we use in the financial planning world. So we think about your financial life as a tree. So with the tree, you've got roots and you've got branches. So when it comes to your roots, you have your 4 major areas: credit management, debt management, risk management, and emergency fund. So those roots, those absolutely have to be in place for you to have a stable financial future. What do we mean by credit management? That means your credit score is good. You have a good credit score, so you can actually get access to loans and other credit things at a cheap rate. Debt management. Are you paying your bills on time? Can you pay your debt off? Are you able to manage your debt in a way that works with your budget? Risk management. Do you have insurance? Do you have car insurance? Do you have life insurance? Do you have health insurance? Catastrophic events like death or sickness, those are one of the number one reasons why people fall to financial ruin. So even at 20, at 19, you absolutely need to have these baseline things in place. And then emergency fund, right? Do you have that 3 to 6 months of money saved so that if your car breaks down, if your air conditioning goes out, if there's some sort of personal catastrophic event, then you're able to survive. Those are the 4 roots. Once those roots are done, then you can move to the branches. What are the branches? Retirement planning, tax management, estate planning, and investments. So a financial plan looks at those 8 categories and makes sure that you're solid in each of them. And usually, depending on where you are in life, you might be really strong in your roots, but you haven't had a chance to get to your branches because maybe you've not had disposable income to do, significant investments, or it hasn't been a priority. But a financial plan and a financial advisor will take you on that journey so you can check all of those boxes. Unfortunately, a lot of people have a not so holistic approach. They might have a great job and jump deep into investments. So all of their they're highly non-liquid, which means their money is tied up in investments. So when they have a catastrophic event, they've got to sell off many of those investments, which creates a taxable event. That is not what we want, right? And so that's why it's important for you to be balanced in all of those areas. A lot of times, the biggest catastrophic event that happens for most families is a death, right? So sudden sickness, sudden death of an auntie, a mom, a dad, that's going to create funeral expenses. That's going to create long-term healthcare costs. In the United States are incredibly expensive. A lot of times, we know sometimes our family members don't have insurance. We know that we have to prepare to take care of our parents. You have to build that in your budget. My father-in-law said to me, he was like, "We don't need insurance. We have you," and that's a reality.
Love it. Yeah, like
right, but that's a reality that a lot of if you have a great job, you might have a great job. You and your husband might have a great job, but then you have to make sure you're going to take care of your parents and your husband's parents. And if you're not married, okay, great. If you're young, you're gonna have to make sure you take care of your own healthcare costs. And so, just in closing, the financial plan is the bird's eye view of your money. You can't be too deep in one area and at the surface in another area, because that creates risk. And the plan helps you come up with a time-based, financial goal-based journey to get to that. Not everyone needs to be investing in index funds in their 19th, but maybe in a couple of years, when you feel comfortable, you get to invest in index funds. I'm very heavy in real estate. I enjoy the real estate market. So I'm a real estate investor. Maybe you don't want to be a real estate investor when you're 20, but maybe it's on your financial plan to save money and make sure your credit makes sense for you to become a real estate investor. Just like we plan for our education. It's so bizarre to me that we spend so much time. We spend so much time in school. We plan to take all these certifications. We go to all these colleges. We do all this professional development to build our careers. Yet we are not as intentional when it comes to our money. And we need to We just need to be. And there's a reason for that. We haven't been taught to be. Other cultures are very fluent in money, very fluent on relying on financial advice, very fluent on investing. To Tomi's point earlier, we've got to catch up. We really do. We have to keep an open mind. We have to become lifelong learners, recognize that there's some stuff we don't know, and trust people to help us. I think there's a lot there. There's so many cultural barriers that make it tough. But I think conversations like this help us break through those barriers so that we can set ourselves up for long-term financial success.
Right. Wow, that's loaded. There are lots of questions coming in. Both of you have touched on the concept of debt. So Sharon, I'm going to come back to the financial advice and how we navigate getting one when it's how do we go through that process? But I want to touch on debt very quickly, and then I'm going to start going into the questions, if that's okay. The questions from the audience. So Tomi, I'm going to start with you. So, I personally, I've tried to get educated on debt, and I have my opinions about debt and how it's used and all that, but I'm here to learn. So there are lots of schools of thought around this debt concept is, use debt to make money, use debt is not good. Even in Christian communities, it's like no one anything but to love them, right? Or whatever. And so it's, so tell us, what's your perspective on debt? What's good debt? What's bad debt? Is it ever good? Is it ever okay to have debt? And, just educate us on this whole debt topic.
Yeah, debt is another thing that's very personal. And it really depends on maybe that money personality to determine whether it's good or bad. Because debt exists because there are companies and skyscrapers across the world that are making millions and billions of pounds from people that are in debt. Your mortgage company is not your friend. Your credit card company does not exist because of air miles or points. They exist because they are making money. So do not be fooled by perks. Do not be fooled by gifts and things saying you're going to give you this amount of time, 0%. If they give you 0% for 2 years and you cannot pay off that whole debt in 2 years, then do not take that card. So, but if you are very disciplined and you keep on top of information. So another thing that we are not good at doing is actually having the information and knowing what we have. Like, information is power. Information is key. If you have debt, you have a mortgage, you have credit cards, you have a car loan, you have unsecured loans. Do you know how much you have in terms of liability? So going back to my point about net worth, your net worth is your assets minus your liabilities. Now, when I say your assets, you can say, well, what's my property value? How much is my pension? How much is my, Roth IRA or whatever? That's kind of easy to sort of just get an amount on. When people think about debt, they actually think about like their monthly expense. So they say, oh, my car is costing me $300 a month. No. Your liability is not that $300 a month. Your liability is, what is that? Was it a $50,000 loan that you took, that the whole finances? Your mortgage might be, you might have a mortgage of, or your house might be worth $1 million, say, right? So that's the value of your property, but you're still paying debt. So your liability there is going to depend on actually how much is left for you to pay off. you know, and that, so it's very important that you understand the structure of your debt, and then be able to classify whether it's good or bad. Now, people tend to say mortgage is good debt. You know, me personally as well, I think, you know, if you have the mortgage on the house that you live in and you manage it well, you know, that's, you know, definitely sort of, you know, it's the better debt to have. Debt is also useful. Things like credit cards are useful to help you build your credit score. As Charlene, Charlene said, the credit score is there, but, you know, if you want to access better interest rates, so if you have a credit card, you use it wisely, you keep your utilization low. So I think, you know, credit companies tend to look at like 30% utilization as like a good, good quality, holder. You pay in full, you use your credit card for things that you can actually afford. It's not for like YOLO, as people say, like, you know, use your credit card to buy things that you only live once, you know, like you have to use your credit card, you know, for things that you would normally pay off and pay in full anyway. So I'm not here to judge people and say debt is good or debt is bad. I think you should manage your debt very wisely so that you continue to increase your net worth. In the Christian community, there's a lot of, you know, there's like Proverbs 22:7 will say the rich rules over the poor and the borrower is servant to the lender. You know, so if you hold those Christian principles, you know, to heart, then, you know, debt is the first thing that you should be thinking about clearing. Me personally, I do not like credit cards. I do not like car finance loans. I do not like any unsecured loans. They just make me uncomfortable. They make me feel out of control. You know, if I have a credit card, I have maybe one credit card. I know exactly how much is on there. I know what I'm managing. And obviously there's a mortgage and everything. But, you know, not everybody is in the position to be able to cut credit cards out of their lives. You know, income is a very big, you know, determinant of how you can manage your debt. So you need to work on making more money as well. So like side hustles, you know, increase the money that is coming in, spend less. Do you need that Netflix and Disney Plus and, you know, your coffee shop says pay this amount a month and you get unlimited coffees? How many coffees are you really going to drink unlimited? You know, just buy the coffee when you need it. So there's a lot of stuff that you can cut out to help you focus on your debt, manage it better, and then just, you know, create a little bit more disposable income that you can direct towards your saving and then ultimately towards financial freedom and investing.
Beautiful. Thank you so much. That's very insightful. And I love the balanced approach to it. Again, know your risk level, know your personality as it relates to debt, you know, what you feel comfortable with or not, but manage it, have it under control so that you can manage it wisely.
Don't throw away the statement. Check your statements. Always check your statements.
Oh, yeah.
Don't ignore them.
Yeah, I love that. And I love what you said earlier around, you know, especially these investment accounts around fees. We never, you know, it's like, you know, now I'm thinking about my 401k and I'm like, I need to go find out how much those people are charging me. Or, you know, there was the time they were trying to get us to pay for extra advice and everything. And my husband was like, you don't need somebody to look at it every month and everything. But yeah, thank you so much. This is very, very helpful. Now I'm going to go to some of the questions. So there was a question around how do I get find a good financial investor? So I believe, Charlene, this is for you. And as you talk about that, you know, I think you've touched on this a little bit, you know, about the when, you know, when is a good time? Are there some things I can handle on my own initially? You know, because getting a financial investor probably costs money. I know your services or the services of financial advisors are not free. So, you know, when is it best to invest in a financial advisor and how do you get one to find that good match?
Got it. So it's a question. It's a great question. It's a question that I get a lot. So with our service, we have financial coaches and financial advisors. And so a financial coach can help you work on those roots items, right? Credit, debt, all those budgeting, that kind of stuff. A financial advisor is particularly there to help you with the branches, with the investments, maybe tax management and legacy planning. And so for folks trying to figure out if a financial coach or if a financial professional is for them, you know, I have a couple of little rubrics that I use. You know, you'll get to a point in your career when your income goes up, but the amount of time you have goes down. And so you'll be like, I need help managing my household. You can be 19 or 20 and be in that situation. Or it might happen when you're 30. You absolutely can manage a lot of these things on your own, depending you are diligent, vigilant, and detail oriented. But the reality is most people don't want to be bothered, but you don't want your tendencies to hold you back financially. So you really need to be self-aware and figure out who you are. Who are you with money? Like that lovely exercise we had earlier, like what's your money personality? Are you just blowing through money in your household? If you are, you might need some help. But if you are kind of that person that's a saver and particular and detail oriented, you actually might have the right natural disposition to be what I call the CFO of your household. Every household needs a CFO. Now, it's either you or your spouse. Somebody has to do it, because if you don't, your money is just going to be flying everywhere, right? So decide who it's going to be, and then say, does this person, do they have the time and the talents to take this role in my household? It's a personal decision. It doesn't matter if it's yes or no. It's just that if it's no, then maybe you're a candidate to get some help. Right. And so a lot of people are like, okay, well, what point in life do I need an advisor? I just think that you literally could use an advisor at every point in life. Starting a new job, starting a different job, having a baby. These are major inflection points in your life. Having a baby, graduating from college, unfortunately, divorce, right? We help a lot of women prepare for divorce. Divorce can be devastating, but we help a lot of women prepare for divorce. Pre-marriage planning, right? Typically, there needs to be some real intentional discussions around money when you're bringing two people together. A lot of times people, they come from a different place, right? So a planner can help you be really objective and independent about how you bring the two households together. And then overall debt management. So I don't think there is a time where you don't need an advisor, but it just really depends on you as an individual and the amount of time you want to spend. And there was one more thing that I wanted.
That's how do you find a good match for you? So you talked about when it's a good time, but how do I know that Charlene's recommendation is is good?
It's right for you. Right. So part of the reasons why I started my company Guidify is that I saw, well, first of all, the whole wealth management industry has a race problem. They have a diversity problem. If you look this is United States specific, there are about 300,000 financial advisors in the United States. 80% of them are white men. And actually, probably half of that number, white men over 50. I had an advisor in my 20s. Let's call him Brad. Let's call him Brad. Brad and I had nothing in common, and therefore I ignored Brad. And so what I find is that, unfortunately, for some cases, this is not for everybody, but if you have an advisor that doesn't understand you, your culture, how you live your life, you're not going to take that advice. And so what we do at Guidify is we try to help you. We try to understand what's important to you and find you an advisor that makes sense. So let me answer the broader question, Kemi. How do you know? First step, credentials. Listen, not everybody can tell you about your money, but let's be clear. They need to have gone to school for this. And there are also licenses to be a financial advisor. Series 67, Series financial advisors have in the United States, it's called the Certified Financial Planner designation. That is a designation that gives them the ability to provide financial planning. But legally, they have to have all of these certifications and licenses. CFP, that's right. Some planners are MBAs, some planners are CPAs, but first and foremost, credentials. Second thing you need to look at, experience. Let me be honest. I don't think you want someone that just got off the boat and just started. And unless your financial situation is super simple. If you have a super simple financial information situation, then it might make sense to have an inexperienced planner. They might be a little bit cheaper. And so that would be good. But you definitely want to look for experience. And then honestly, gut check. You need to see if you like that person. The financial advisor, so this is a coach and an advisor, they need to be giving you independent, objective financial advice in a respectful and dignified way. If you're interacting with an advisor and they are condescending, they ask you questions that are inappropriate, they are dismissive in the way they operate with you, that's not the advisor for you. This seems a little strange, but it happens. I'll share a really quick story. My husband is in healthcare, so he's a healthcare professional. We were working with an advisor, Black male advisor, and we had all these video meetings, and every time we had a meeting, he would not address me. Crazy, but it happens quite a bit. And so what you see is that, some of these advisors come to these relationships with biases that make your experience horrible. We fired him. I just think we have to honor the fact that sometimes women are not respected when it comes to money, not respected by financial professionals. And that happens to women of any age. And so, I would say, think of finding an advisor just like the way you find a doctor. This is important. This person is managing your financial health. Your medical health is important, but your financial health is important too. And last thing I'll say is just you have to think about when you're working with an advisor, you have to acknowledge that you are effectively financially undressing in front of someone, right? This is a very personal experience. And you have to, because of that, let's honor that and really be focused on finding the right person. You don't want to have 1,000 advisors, right? Sharing all your information everywhere. I think you just want to have a search that makes a lot of sense. You have to decide that you are ready for that. And if Guidify makes sense to do that. But I think that, it's a really important process to start because it will open up your eyes to worlds that you just have no idea exists and what you can really be doing with your money. And if you're young and you do it, man, you've got the power of time on your side. And I'll leave it at that.
Thank you.
Sorry, can I add something?
Absolutely.
Just in terms of the financial planner, which I think obviously, as I said, is something it's really critical depending on what stage you are. But one thing I always ask also is kind of try to find out how they get paid. Like I think there's different pay structures for financial advice. So some of them will get paid to push particular products towards you, and so they might be having not the best incentive to advise you of a particular product. Some of them have a flat fee, which is, you're going to pay them the same amount every month. And so then maybe you have a bit more comfort knowing that actually they're free to be able to, really offer you a wide diversity of products to suit you, as opposed to only the ones that are going to get them paid. Some of them might not ask you for any money up front, but they only ask you for money when you trade. But then if they're telling you that every other day there's a new trade to do, they're going to be making money every time you buy, every time you sell, every time something, moves around in your portfolio. So there's things like that hopefully they should be able to break it down really simply for you and for you to understand, this stuff, because it really isn't rocket science. It shouldn't feel like rocket science. And if a financial advisor is making you feel like you are stupid or something, then he's not the person for you.
Good one. Good. I love this. Oh my God. I know I'm looking at time here. I'm going to take one more question to wrap us up. This has been loaded. Oh my God. And so let's see. So there's a couple of questions in chat that I'm going to wrap into one. It's about where can I get further education? Obviously, we're only here for an hour, plus, and there's so much information out there. Tommy mentioned earlier that's information on the internet. Are there any formal or informal resources or approaches to getting more information about investing? And there was one specifically about kids, how to educate your kids around financially. And so what investment, the different types of investment, Tommy did a great job with kind of giving us that broad overview, but kind of going a little bit deeper. Where can we go for that kind of information? And, Tommy, you can start, and Charlene, feel free to chime in.
Yeah, I mean, there's so much stuff out there. I mean, personal as well, what you prefer. I think there's a lot of books out there that help with investing. I used to be a really avid reader. I just don't have that much time to read as much anymore. I've discovered podcasts, and I find podcasts to be, like a lifesaver for me. Like I can listen to them on the go, and there's some really good resources out there. Social media has a lot of influence. There's a lot of, I know it seems very like fluffy, but there's a lot of sort of financial influences, as you would sort of call them. But some of them give quite good nuggets, and they just package the information so simply and in really basic ways. So there's the page I follow, which is called Black Girl Finance. She's a lady in the UK. She's very popular. She's got a lot of profile in the UK now, and she's on, on all the platforms all the time. But she's written a really good book, and she's also on social media. You can follow her as well. That little quiz I gave about, investing for your kids came from a page called Teach Kids Money. And it's also, gives a lot of nuggets about just, learning how to invest for your kids, teaching your kids the value of money. And yeah, as I said, just, listen out for podcasts. Message me offline if you want to know some of the podcasts I listen to and some of the books that are out there. There's loads and loads, but I would say, off the top of my head, Black Girl Finance is a good one to kind of start with and explore.
Right. Thank you. Very, very helpful. I know Charlene has 2 books for kids, so that's definitely a plug for that, but feel free to share.
Yeah. I think kids learn by doing. And so I'll kind of share how I've engaged my son. So I have an 8-year-old son. And so we do a little bit of investing on Robinhood. We do some investing on Cash App. For him, we actually use the tools in those apps. And so I would suggest you guys start by using Robinhood, Cash App, Acorns, and Stash. All of those apps have investing functions, particularly for children. They also have bite-sized bits of information that is really helpful. So I think kids enjoy seeing the appreciation quickly. And that's how I've been able to kind of hook my son in the investing world. Our company actually has a site where we're starting to share a little bit more investing information. And that is it's at Her Black Wealth Matters. That's on Instagram. So we're sharing a lot of information. We also have a club on Clubhouse, and we try to have weekly rooms where we talk about these things. And I would just say, the other resources. Yeah, it's hard. I think I saw a comment in the chat that says it's easy to get overwhelmed. It is. Pick 3 and start. Just get started. You know what I mean? Yeah, this Rome is not built in a day. How do you eat an elephant one bite at a time? If you have children over the age of 5, I would just, start with one of these investments and do fractional share investing. Because what you're trying to do is plant the seeds of interest. You're going to invest for your children outside of your child, but you want to plant the seeds of interest with your child so they learn to not be afraid of investing. And so I think that a lot of these super easy apps are actually a lot. I think Revolut, is the one that works in the UK. I think that is stocks and crypto. It's definitely crypto. So there are lots of options, but I would say, definitely look at resources, but start, download these apps, open an account, put $5 in and start the process. That's a great way for you to learn, as a new investor, but it's also a great way to teach your child. That way you don't have to be overwhelmed with reading a book or finding the right podcast. Many times these fractional share apps, it incentivizes them to simplify it because they want you to gamify investing. So leverage that. They have whole teams of people breaking down these concepts to make them super easy. So I would always try to find those resources. And last thing, CNBC.com has a really wonderful section on money. And I'm trying to remember what it looks like. It's actually sponsored by Acorns, which is a fractional share investing app, but it's really great. And so I'd check out CNBC.com. And of course, if you're just trying to bombard yourself with money information, there are lots of shows you could be watching. You could be watching Bloomberg TV, Cheddar, so quite good in the United States. Actually, I think that's US and UK. And, I would just encourage you to think about all the different inputs, try to roll this knowledge about money into your day-to-day life so that it doesn't seem so foreign. You should be watching CNBC. Listening, you should be listening to that and even having that on in the house for your children to increase for them that it's important. So.
Right. Wow. This has been, I know we're way over our time, but I know we can go on and on. We see the comments in there, very powerful, very important insights and everything. So as I try to close out here, Charlene, Tomi, do you have any, in 1 minute each, closing thoughts to share with, with our audience as I, try to just finish up with announcements? Any closing thoughts?
Start early, start now. Time is the only thing that we have to play with here. So just do something. Start to have a structure around what you do. One of the things that I suggest to people, I suggest to friends, is to have a money day or a money date. That's a good day. It takes the pressure off everything else or through the month. And if you have a day where you guys just decide to talk about what are our wants, what are our needs? Should we put more into our, discretionary stuff this month because we want to do something fun? Should we scale back on the saving this month because we want to put into a sinking fund for our holiday in 3 months? So it's just a good time to just check in with each other and get everybody on the same page. Also, kids and money, I love it. Like, invest in what you know is also the key thing. If you're going to invest in stocks, like I talk to my daughter, she knows that she wants to buy stocks, to buy McDonald's, she wants to buy, when I gave her the same kind of thing on an app to buy, the first thing she wanted to buy was Roblox. I don't know if you guys have kids. I know about this Roblox game that these kids play. Yeah. That's the stock that my daughter wanted, bought because she knows it. And she ended up doing so well with the stock. I was like, I was looking at it like, what is this stock? So it's like, what because you will be more interested in following the stories around that company if it's something that you already know about. So start early, invest in what you know, have a money day, and keep talking to your kids about play Monopoly, make it part of their lives.
Beautiful. Thank you. All right, Charlene, any final thoughts?
Yeah, I totally agree. I'd say find out who's the CFO in your household. Let that person lead in your household with regards to money. I love the money day. I was going to say, like, establish regular monetary check-ins for your house. Like, it's on my calendar. It's every month, just to see, just to ensure that you are where you need to be, and integrate wealth building in your lifestyle. And what does that mean? That means, you should be listening to Money TV. You should maybe be reading 1 or 2 books. And you should be accessing information and advice as it makes sense for you and your family. So, and just recognize that this is a marathon, not a sprint. It's a journey. Those mistakes, we call money mistakes tuition. That's those are the price you pay to learn, right? And so if you make a mistake, dust yourself off. Make sure you remember what you learned, but you keep moving. So I encourage all of you guys to be a lifelong learner of money. It's such an important part of our lives. And I'm just super happy that I was able to be a part of this discussion. So thank you.
All right. Absolutely. Thank you so much for having us. And Charlene, I know with your company, I know you have stuff coming up, you have resources. How best can, our ladies, our audience here, reach out to you? What's the best way to contact you?
Yeah, so we have a website. It's called Guidify.com. So you can check out our website. And if you would like to talk about being matched with a financial professional, you can sign up. I'm also very active on Instagram. So it's at Charlene Federico. You can also check out my company on Instagram. It's Guidify. And we also have a brand, particularly for Black women investors. Like, we have a goal of trying to build 1,000 Black women investors. And that movement is called Her Black Wealth Matters. So we are on Instagram, and we'd love for you to follow our page, and just really, be interested and take all the money and investing advice that we're sharing. And I'm happy to put all of that in as well.
Yeah, put it in chat, please. I want to be one of your 1,000 female investors.
We're starting with crypto, so we have a cryptocurrency course coming out.
Really quickly.
Yeah, I'm a big fan.
Right. Great. Well, thank you so much. I'm just going to wrap up real quick. Our time has been very well invested this afternoon. I know I see a few newbies that I have not seen on our webinars in the past. Do you have anyone joining us for the very first time? The very first person to tell me will be getting a prize, and think money. All right. T-O, you're new. Yes, I noticed that this is I've not seen you on before. So thank you so much for joining us. And Nika invited you. Great, thank you. And team Oni Shola, please, if you can capture her information. And so, you will win a gift voucher So thank you so much for joining us. We always love our first timers. Please join us for our future sessions. We always have something every third Monday of the month. And I will say, so quick on giveaways, let's see. We do have some we always like feedback. The link to our feedback form, it will be put in chat. Please, please, please give us feedback. We want to know the topics you want to hear about in the future. We have this going on every month. And so our goal is to equip you and to build you up so that you can deploy your amazing gifts and talents out there in the marketplace. Very quickly, we do have programs going on. Again, so many programs going on. So coming up soon, every Saturday, if we're not having a webinar, we have something called Inspiring Conversations on Instagram. Really just same time, conversations about women doing amazing things, extraordinary things out there, hearing their stories. And so we have one coming up next week, Saturday, The Whole Woman and Her Identity. This is part 2. Part 1 was amazing. You should be able to find it on our Instagram history. So if you're curious, you can go check it out. So I invite you to join us. Just kind of join on the go and listen in. It's always very cool, insightful, and the likes. And then we do have our webinar coming up in September. Look out for more information. What I did not have here, and that is just, I can't even believe I didn't put it on here, is we do have our conference. We have an annual conference that takes place in November, the 3rd weekend in November. It's going to be in the 19th and the 20th of November this year. It is going to be amazing, and so we are looking forward. More information will be shared. If you go to our Instagram, our social media handles, you'll find information on the conference coming up soon. Quantum Leap. We're taking on new frontiers and stepping into new places and spaces and doing amazing things. As the world has changed around us, we are not going to stay the way we were in the past or the way we are right now. We're getting ahead and stepping out, and God will help us to get to where He's taking us to by the grace of God. If you have a business, and you want to, make sure you want to be showcased, you want to connect with other business owners, please fill out your information at bit.ly EPR business directory. We will be happy to capture your information so we can help with connecting you with other business owners. And just very quickly, again, I'm just going to say this at a high level that we're a praying ministry. Our foundation is prayer. I call us an organization because we have so many arms. One of the main arms is our prayers, which happens, that's how we started. Happens every week. We have multiple prayer sessions, actually. We have on Saturday mornings at 7 a.m., we have what we call the call. It's an intercessory prayer session, 1 hour. And then on Mondays, we kick off the week at 12 a.m. Eastern time for, we call it Command the Week, declarations as we shape our week, what it looks like. And we have different themes and focus areas. This week, we're focusing on I am relevant. So we speak the word of God to shape our destiny. We shape what it's going to look like. And we have amazing testimonies as a result of that. We also give. We give to the persecuted church. We give, towards pediatric healthcare in underdeveloped countries. So we have a lot going on there. So there's so many ways that you can give. You can give PayPal or our portal. If you go to eprglobal.com, you find lots of information there that will help you. So I just encourage you to partner with us, be a part of the movement of what we're doing. We are blessed to be a blessing to you all. If you have it in your heart to be a blessing to others through us, please feel free to be a part of it. All right. And we talked about how we use our money to extend the kingdom of God. And if you're in that space and you desire to do so, we are a platform that you can use to do that. Again, follow us on any of our social media handles, Instagram, Facebook, YouTube at Esther's Preparation Room, Telegram, join our community of women. We do amazing things every week. God is doing amazing things in the lives of individuals and as a body. And I just want to thank our panelists again. Thank you, Tony. Thank you, Charlene. Thank you for being such a blessing to us today. Oh my God, we've learned so much. Thank you, Oni and Adeshola behind the scenes. And thanks to our amazing participants who have just made this so enjoyable for us today. And I hope that you not only take what you've learned, apply it in your lives, but also share with somebody else. Forward that YouTube recording to somebody who will benefit from it. So have an amazing weekend. Thank you so much. And hopefully we'll see you during our next